What up, everybody? Welcome to another class. You know how we got to start with the gems from the previous week, and then we're going to get into the upcoming week so I can tell y'all what I'm expecting for the week of September 15th. But right now, I really want to talk about last week, specifically last Wednesday. What was last Wednesday? Last Wednesday was CPI day. That's a day that usually trips a lot of people up. Like CPI day, people be scared of that. A lot of people don't trade it. That's not a bad thing, by the way. If you don't trade that, it's a lot of volatility, and y'all about to see that this day that we're about to go over was absolutely a lot of volatility. So how do you trade a day like this profitably? What could you do to make sure that you don't get whether either chopped up or just on the wrong side of the market? Because when on an aggressive CPI day, when it's not chopping, oh my gosh, if you on the wrong side of the market, they'll take your head off. This was one of those days. This is one of those days. So how do you make sure you're on the right side of the market? So boom, coming into this day, we have a lot of liquidity to the downside. Now, one thing I hate, it's like a pet peeve. It's like a pet peeve of people just saying like, yo, there's liquidity on the downside, as if there's not liquidity also on the upside. There's liquidity on both sides of the market at all times. You feel what I'm saying? All times there's liquidity on both sides of the market. So people, I think it's like a buzzword, like this liquidity thing is like a buzzword. So it's like, yo, there's liquidity there. And I'm always gonna kind of and say, I'm always gonna counter it and tell you, like, yo, okay, there's liquidity there too. So which one are we going for? That's the skill set. It's not pointing out the fact that there's liquidity. It's liquidity everywhere. It's when are we going for which side? That's the skill set, knowing when we're going for which side. So I'm about to talk about that because look, there's a ton of liquidity all over here too. There's liquidity on these highs. And of course, like I just pointed out, there's liquidity on all these lows. All right. Now, this is a nice liquidity pool here because it's a series of relatively equal lows. But just on any given low or any given high, there's liquidity. Okay, so with that being said, coming into market open, it was pretty bullish. CPI was a pretty bullish reaction. This is the 8:15 15-minute candle. This is the I didn't even want to show that yet. Hold on. Let's go to the 5-minute and show it instead. All right, so that's 8:25. The next candle should be CPI. It goes down at first, right? It goes down at first. So CPI first reaction to the downside. Now I'm gonna tell y'all, I don't like to trade at 8:30 on news events. I prefer to just come in during the New York hour at 9:30. You feel what I'm saying? So standard market open at 9:30. So I don't trade here, but I'm looking how we went bearish at first, and then guess what? It got bought right back up. So heading into market open, we were bullish. Drop off, stopped out some people in the downside, and then carried on to make a higher high. Now, currently in this range, this is an entire range right here. From this low to this high, this is all that range, this whole area. So the high of the range is right there. Okay, keep that in mind. We run the high of the range just now, so we should be making a higher high, and we want to see some continuation. I talked to y'all about when we leave any given range, any given consolidation, any given range, really, like I said, you want to leave that with a fair value gap ideally, and you want that to be respected, right? You want that fair value gap to be respected. So boom, we come above it, and next thing you know, we make a fair value gap. That's good. We like that. Here's on the 5-minute time frame, you see this fair value gap. That's cool. Now, if we're going to continue higher, it's very likely that this will get respected. You don't want to see price come back into this range. That's all I'm gonna tell you right now. That's all I'll say to that. You just don't want to see price come back into this range because there's no need to. This is all healthy price action. It's time to get the heck up out of there. And so off the rip, like very early in the market day, after CPI, after this bullish reaction to CPI, you already know if we come back into this range, they're going to short the entire rally. Because if we're coming back to the range, largely it's really to come and run sell side liquidity. So this is how we knew to short early in the morning. All right, cool. So right here, this is the 9:30 candle. Notice that at first we did not tap into this fair value gap. Let me show you real close. You got to look close for it. See that green wick? The green wick did not tap into the fair value gap. So we're really just running on absolutely nothing for real, which is the manipulation there. The first bad sign was invalidating this little area right here. That's the first bad sign. Notice we came up and used it on the other side, and then we start dropping off. Off the rip right here, you now have a target of these lows, and if they're gonna run these lows, they're gonna run those lows. If they're gonna run these lows, it's very likely they're gonna come and run these lows. And honestly, we should have ran those lows, but I'll talk to you about that so you can know how to get out at the very bottom of a move. So basically, you know where price is going right now. And you're probably saying, yo, bro, like, there's fair value gaps here. Like, I was scared when I saw this because I was thinking price was going to bounce right here. And I was thinking price was going to bounce. There's a small one right there. And I was thinking price was going to bounce right here too. How did, like, bro, why did you know to ignore those? I know to ignore those because these are fair value gaps that they're not matching the current objective. They're not matching the current order flow. And they're just out of context. They're out of context. These are fair value gaps we absolutely ignore. We're ignoring those. Remember, my hint to you to know why to ignore them is what I talked to y'all about regarding this range. If we were bullish, we would have continued higher from right here. Therefore, I already know we're not bullish. So for me to get bullish on this fair value gap right here is me being on the wrong side of the market. So that's a dub. My fault. That's some New York lingo. That's something I want to ignore. This is something I want to ignore. And then this is something I want to ignore as well. Okay, so I'm not worried about those. I'm strictly staring at really the liquidity here. And then David said those are the YouTube fair value gaps. Bags, those are the YouTube fair value gaps, man. You know, the YouTube guys might tell y'all to use these, but when you really understand it for real, you know, like, nah, that ain't it. That ain't it. Sierra, what's up, Sierra? No, yeah, that's a dub word. So boom, here it go. Without even getting into the lower time frames, because I can show you the 1 minute here. But I mean, I'll show you real quick. The 1 minute was a choppy move down, so this was suspect. Now, why am I still holding when it looks so choppy? Because I know where price has to go. And this is why I say I trade off of objectives. It's all about objectives. I know where price has to go. Even though it's suspect, without getting into like too much like mentorship type material, like, because that's explanations in itself. That's PowerPoint presentations in itself. I'm trying to keep it very short and brief. It's like price literally has to come to this yellow line at this point. If it doesn't, I know we're probably gonna chop for the rest of the day. So it's like if we're not gonna chop for the rest of the day or something like that, we're coming here next. And so that's why I'm still holding. I'm still holding shorts. I was in and out of this. Like, don't get me wrong. I didn't short and then hold the entire drop because of the nature of it. So like I would stop out break even maybe right here, and then I will hold again and catch this drop, and then I'll take some profits off, etc. So if y'all know what I mean, it's one of those staggered drops where you kind of in and out of it, and then I was able to catch like a better portion of the drop once we really killed these lows. Basically around there, yeah, like around here is where I started really holding, and I was able to hold all the way through these lows. So now let's study this part. Let's study this part of price action. Let's study this part of price action. All these highs have been protected, right? None of these like highs are being invalidated. You got a lower high, lower high, lower high, low. Like, it's maintaining a bearish structure, you know, but I don't like the lack of fair value gaps. So I'm always wary about this. So if you're wondering why I was more so in and out of this portion, is because I don't like being in moves like these, because yeah, it didn't happen this time. Luckily, it didn't happen this time, but that's when you see this type of candle come out of nowhere, like literally out of nowhere, just a big green candle to wash all of that away. So I didn't want to be a part of that. So that's why I play moves like these cautiously. Once price starts moving more smoothly, that's when I'm more like, all right, I'll rather hold this versus play it conservatively. You feel what I'm saying? So now notice when we got this big red candle, we got this big red candle as we ran these lows right here. I wonder why. Maybe it's because when we run liquidity, we run it aggressively. We don't run liquidity lightly. We don't like to stagger through liquidity too much. If we're gonna run liquidity, we're gonna run it aggressively. So write that down. If we're gonna run liquidity, we need to run it aggressively. If we're not running liquidity aggressively, there's a sign that we might want to just be sweeping to go higher. So there's a difference between a run on liquidity like you just witnessed and a sweep, right? A sweep is when we're gonna like basically tag it real quick and go back in the opposite direction. Understand me? So that's that. And also, once again, if we running this, we're gonna end up running that. So we're running liquidity. Now, for me to hold this play, I need to see us continue to hold that bearish sentiment. Continue to hold that bearish sentiment is the goal. So what does price do? It holds that bearish sentiment, and I'll show you how. You have this fair value gap right here that gets respected. You know, we look at the bodies. This to me is signals that I'm on the right side of the move. You see where the bodies held this fair value gap? My thing is lagging a little bit. You guys see where the bodies held this fair value gap? Look how the bodies are sitting below the 50%. This right here is telling me like, yes, price is weak. You know, that's a good sign for me. Even though it's consolidating on the low side. Bodies wise, it's about body closure. So this is a good sign I'm on the right side of the move. On this fair value gap, this is the fair value gap that we're taught in the mentorship. We go over this. My mentees will know we're looking for price to react right where it did. We don't want price coming into this one. In this scenario, mentees, I know we went over this in detail already, but y'all know we don't want to come to this fair value gap. If we come to this fair value gap, it's actually not the best sign in the world. Like, we don't really like that revisit. So we really want to just stay on this one in order to go lower. So when I see this, it signals to go lower. So when people say, yo man, you're really like, how do you hold trades? I know a lot of people have a problem holding trades. It's really about learning how bearish price delivery typically is. What is bearish price delivery, right? Like, how does it typically deliver when it's going for a target? You're going to see things like this. You notice that, for example, this is the nearest fair value gap to price action. So when we retraced, we rejected the nearest one and then continued dropping off. This one is the nearest one as well. So this retracement reacted to the nearest one. Those are signs that we're part of a pretty aggressive move to the downside. That's it. Those are signs. There's more I could speak on why we like this one, also where it reacted to. But once again, those are lessons in itself, and it'll be long-winded and we'd be here for 3 hours. But I'll just say, like, something you could look for is if we're reacting to just the nearest ones and continuing to go, that means price is super like strong. In this case, it'll be super weak because it's a bearish move. But yep, so there we are. Price continues to drop, and now we get to this level of liquidity. Let's remind ourselves where this is. This is those 3 lows I was telling you about. You see these 3 relatively equal lows? We just got to that level. And hopefully, I know I don't do nothing about support, resistance. I'm not talking about that as a level of liquidity. All right, so but at the same time, there's liquidity below it. And this is why I keep telling everybody, yes, there's liquidity everywhere. We ran this level of liquidity. There's liquidity below it as well. So let's see how price deals with this area. When you look at the 5 minute, it's been a pretty decent drop on the 5. I know the 1 was a lot choppier until the lower parts of the move. So it's really easy to hold this whole section for real. And then here we go. Let's talk about getting out at the bottom. All right. So we come to this level. The first thing we don't like is the staircase into that liquidity. We don't like that. We don't like the fact that it's moving like this into liquidity. I want you to look at the difference between how it's dealing with this liquidity and how we dealt with these 2 yellow lines. Y'all see the difference? Y'all see this large expansion to the downside over the liquidity, creating fair value gaps over it. That's what we want to see. And then guess what? We use it as a line of defense and continue lower. But now look at this drop off. Real staggered. this is signs that price might want to turn around. Even if it's not a full reversal, we may get a deep retracement where they're going to take back a lot of my move. So maybe it's just best to take profits here. And so first of all, that's what I did. When I seen these signs, that's when I took profit. Inside of this chop I liquid, that's when I took profit. Thank God, because although we have yet another level of liquidity here, it's there, but we don't want that today. It's just not for today, or it's not for that moment. Because the thing is, you could always get back in. So if we pop to the upside, we could always get back in if we really wanted to, if it was truly about to be bearish again. And so, like, so we obviously like just straight up pop to the upside, and the rest was history. So now that's the bearish side of this move. This is the bearish price leg. This was my day right here. The upside, I was not interested in the upside because I already made what I had to make. So this also goes to being content with enough. All right, I have certain goals I'm out here to make when I come out to trade, and so I hit those goals through this. And so one thing that I'm trying to get my mentees as well as everybody in this community to do is to not over trade. I don't want everybody to over trade thinking that you got to be in the market all day, just taking 55,000 plays, because then you're susceptible to giving money back. Like Steve said, that's my biggest issue, and I appreciate you sharing that. That's also been an issue that I struggled with for so long, that in these days I've gotten a whole lot better with it, and it's just continuing to level up my career, where it's like doing less has definitely been more for me. It definitely has been more for me. So even though what y'all about to witness with this, if you don't remember CPI day, is price absolutely goes bananas. Like price goes crazy to the upside. And I felt so content watching it from the sidelines because I made way more than I needed to on the drop off. Like I made way over my profit targets for the day. And so, yes, I could have probably quadrupled that amount with the rally. Yes, I understand that, but it's like chasing every candle is actually a detriment to your career, so I'm glad that, I see that people in the chat can relate. Real talk, I think a lot of traders can relate, and you have to like only learn from experience. You know what I mean? So yeah, it was a tough week. D-Loves, I know somebody said emotions got the best of him last week. It was not the easiest week, so I ain't mad at it. I just hope that capital is protected. Sierra said she started locking her account. That's a great strategy as well. So boom, let's now talk about the upside move. Now once again, I didn't trade the upside move, but there's still gems I'm going to talk about with it. Okay, so somebody said trying to crack the code to controlling emotions. It's about being intentional about your growth. That's what it comes down to. So being intentional about your growth is that you have to get to the core of why you keep making the same emotional mistakes over and over and over. Like you have to get to the core of that. And when you get to the core of that, you need to actually actively address it, because it's very easy to become comfortable being mediocre, because you have this dream in your head that it's like, I'm gonna get it one day. But you realize that you could say, I'm gonna get it one day for literally 50 years straight, and next thing you know, you 75, you 80 years old. Like real talk, that's what happens to a lot of people. Like it's just like people who say, I'm gonna get my life together. They just be talking like, yeah, you're not. Like until you actually go register and start that LLC, it's just all words at this point. And that's kind of what I'm seeing with these emotions that we face as a trader. Like as traders, whether if you revenge trade a lot, you ain't do nothing. You ain't get to the core of it. You never really truly analyze why you revenge trade and then try to get to the bottom of that issue. Whether it's like, I was revenge trading back in it. That was a huge problem for me because I'm coming from sports. Like back before I was a teacher, I was a basketball player. So it's like, and Kobe was my major influence. So if y'all know Kobe, he's the most competitive person of all time. And so that I embodied that. I literally embodied the heck out of that. So taking that competitive nature to trading, which is not conducive, it was not good for trading, honestly. So I had to really get to the core of like, okay, why am I like this? And then be actively addressing it. And the next thing you know, you start seeing it go away. You start seeing it go away. If I was desperate for money at a point too. You can't trade when you're desperate for money. You can't do that. But I don't even want to, go there. I could, man, y'all make me want to do 15 classes in one. I want to teach y'all about so much at the same time. I gotta stay focused here. I want to talk to y'all about psychology and all of that, but I'm gonna stay focused right quick. So boom, let's talk about the reversal. You guys now know, first of all, how we knew that it was gonna reverse in if we were bullish. Coming out of a range, if we're bullish, we need to pretty much just leave the range. You don't want to come back into it. Second of all, bearishly, how do we know the bearish move was over? We knew it was over because of the staggered move into liquidity. That's always a bad sign. Now, by the way, it's a probabilities game. So you will see this happen in your career one day. You're going to see price look like this, no fair value gaps anywhere around the liquidity, and still just somehow keep dropping. And you're going to be like, oh my gosh, it's going to happen. But we play a game of probabilities. I would rather take profits. First of all, I'm still making money versus be a person that's like, nah, I'm holding, and then let them take my profits from me. So you have to pick your poison. This has saved me, like knowing to get out has saved me way more times than caused me FOMO. Real talk. So Keisha said I'm about to start preaching. My mentees know how I get. When I start talking psychology, I'll be on here for 2 hours just yelling at them. Like, yo, when you gonna get intentional about your growth? Like, so let me chill though. Let me chill. All right, so word. On the 15th, on the 15th, yo, we had no signs to go short on this fair value gap. This fair value gap here in the middle is irrelevant. The only part of this fair value gap right here that's relevant is the lowest portion of it. And so, once again, without getting into the teaching of that, we just got to the lowest portion of that. So to make this quick, what I'm speaking on here is this is a point where you're battling between a bullish PD array and a bearish PD array. I'm gonna just call this the bearish PD array. So this was the most important moment of Wednesday, because if we were bearish, this rejection would have been the rejection. I'll show you one more time. It is the beginning of this 15-minute SIBI. This beginning part, not the middle of it. Everybody thinks that on fair value. Whoever tells you that, listen to me close, man. Whoever tells you that price has to touch the 50% of a fair value gap does not know what they're talking about. Stop listening to them, because that's not true. Price does not have to touch the 50% of a fair value gap before making the move to its objective. It does not. It does not. It does not. It does not. So if that's just not true. So first and foremost, in this fair value gap, we're looking at the very lowest portion of it. So this point on Wednesday, I can see it's gonna be one of them lag days. I think I know why too. Hopefully we can push through this class again. Okay. So we're battling between a bullish PD array, which is this order block. Hopefully you guys can recognize the order block, and a bearish PD array. That is the beginning of that 15-minute SIBI. And so here we go. Now my thing is lagging too much. Come on, I'm trying to put the people on. All right, so first of all, let me close a few of these tabs. I think this probably will help. And close that. I don't need this for real. Close that. And I'll leave it at that for now. All right, so hopefully that helps at some level. So anyways, why we didn't go short on this 15-minute SIBI is because in a 15-minute SIBI, what did we learn about confirmation? We learned that we want to see 1-minute SIBIs come out of that area. So yeah, we touched the 15-minute joint, right? Y'all see we touched it and we got a reaction, but we're not seeing 1-minute fair value gaps to the downside. So there's no need to go short yet. But what do we see? What do we see? We see that this 15-minute SIBI pushed us into a bullish order block from the 1 minute. One thing you're gonna realize is that when price is bullish PD arrays work. They work. So that's why I say this is the most important part of the day, because the only, like, if this SIBI did not work from the 15-minute, we're gonna run the highs. And that's something that I teach my mentees. If it wasn't this lowest part of the SIBI, then it is these highs. Notice my language. If then, it's an if then statement. If not the lowest part of the SIBI, then highs. Think about the power in that, because at that point, it's like once we make it past this, you have an automatic target. Just like the downside, I showed you guys how we had an automatic target on the downside. Now you can see how we get these targets. So you have an automatic target on the upside. So, but it all depends on this order block. So we tap into this order block, and then price runs. If you missed the order block masterclass, then DM me. I can send you the recording. We go in depth on this. Anybody who came to the masterclass will see why this is such a beautiful order block. This is exactly what we talk about. It reacted exactly where we would want to see the reaction. So yep. And I know I missed some comments in the chat. I'm gonna go back over the chat at the end of the Zoom, but I do appreciate y'all. Muting my video make up the bandwidth. It probably would. I just hope I can get through it. It's been a little bit better since I closed those tabs, so let's see. But yeah, you know, literally the rest was history. And like price ended up rallying for the rest of the day. Like literally, it was just a crazy day. And this order block ended up being literally like the low of the move. You know, this was the last like dip. Like this, you never got stopped out is what I mean. Like if you entered on this order block and you held, you never got stopped out. This drop off was probably scary, and I understand that, but you'll end up seeing that it held this fair value gap. This was the first PD array that it came in contention with. See, look. See, there was no fair value gaps here, see? So as price is dropping, this is the first bullish line of defense that we have, and it clearly worked out. Y'all know we look at bodies, not wicks. Y'all know we look at bodies, not wicks. So yes, you see that it clearly worked out, played out extremely well, and the rest was history. Ended up, you know, going way higher. This is, yo, that's still not the high today. Where is that? This was the high right here. This was the high today. That's crazy, right? Crazy. All of that order block and all of this moment. This moment right here was the most important moment of the day. So yeah, man, that's the upside. I talked to you about the downside. So hopefully you guys got the tips on how to know when to get out, as well as how we can like deal with a range, and yeah, how to not fall in love with your targets. Like if you're not, that's what we call signatures. Like signatures was telling you to get out the move. If you're looking for this last level of liquidity, or you're looking for these lows as well, price didn't have that for you. You got to pay attention to what's really going on. Don't just be hoping and holding it. Don't just think there's liquidity down there. Yo, there's liquidity everywhere. There's liquidity everywhere. You feel me? Price ended up going back for buy side liquidity. What you gonna do about it? That's what it is. So that's that. Now let's look at this. I can exit that tab. Let's go to this tab. Let me tell you how we can recognize chop. I'm hoping as I close these tabs, my thing ease up, man. So now Friday. How do you recognize chop? How do you recognize chop? Chop is killing us, ain't it? It's killing your account. It kills everybody's account. So how do you recognize it early? First and foremost, you come to the chart in the morning and it looked like this. This is going back from the previous day. This is Thursday during the New York session, all the way through Asia session, all the way through London session, all the way into New York. This is what you see. You know, the NASDAQ averages 400 and something points a day of a range, meaning from the high to the low, it usually covers about 400 and something points. That's on average. Even from this low to this high so far, you know, it's only a little over 100 points. Like we're like, this ain't it. I'm weak at the chat. So word. All right. So that's you see the 5 minute as it's climbing, it has no fair value gaps. That's also a bad sign. We don't even like moves that look like this. This isn't true bullish delivery. So I wouldn't First of all, this is when you recognize this, it's better to stay cash. We just talked about doing less to make more. If you happen to trade, when you come to the market and you see nothing favorable, if you happen to trade, please don't trade with your real size. Please, at least, if you're not going to go cash, just at least promise me you'll just at least trade with a baby size, because if you do lose those trades, at least you didn't destroy your account in the mix. You feel me? Now, that's one point. Now, here, the market opened up on this green candle. This is 930. We popped to the upside, came all the way back down. This doji in the middle, this doji right here in the middle is the consumer sentiment candle. This was a crazy candle. It opened up, it ran higher, then it ran lower, then it came back and closed right here. And then it tapped down, and then it just staggered its way up. So now around here is where I was telling my mentees that I'm looking for a move back lower. I said around 1030. Now the move started happening at 1025, but you know, that is this move right here. So this, I put this in the free community. This is the move that I had caught, and I'm gonna tell you why after this move I knew to go cash. Because look, first and foremost, man, this giant nasty work. First of all, the reason I even talked about that time, there's a macro at that time. So around that 1030, there is a macro that runs in the market. You're gonna see some movement around that time, right? And so that's why I was already looking for downside, by the way, because of the nature of this move. And I realized that even with the news candle, people who are long right now haven't really been stopped out of too much, because let me go back to the 5 minute for a second. If y'all see the 5 minute, everybody's been pretty protected. The only stops that's being run out so far have been stops on the upside, buy stops. So it's just like I'm looking for a bearish move, just sweep some liquidity to the downside. Okay, so I'm really aiming for these lows, but I'll put a yellow line at these lows as well. And why am I doing that? For people who are not familiar with liquidity, there's stop losses at every swing low, there's stop losses at every swing high. Understand that, I'm going back to the 15-second now. Understand that on the 5 minute wick, that's like a swing low on like a 15-second. And so price will target swing lows and swing highs. So boom, I entered here. Why? Because I seen the same thing. If we look at this as a range, clearly we don't have really intent on moving past that range. So I'm looking for lows. When will that happen? Maybe when we start forming fair value gaps, especially those that are not getting respected. Right there. I mean, my fault. I meant to say, especially when we're forming fair value gaps that are not getting revisited. This never got revisited. As we're forming this one, I entered, and thank God we didn't even revisit this one. Beautiful, we love that. So now I'm just in with no drawdown. Like I'm just in my trade. I have no drawdown, and it's just a straight shot, pretty easy move down to the yellow line. Now, same thing. You see these lows. How do we know to get out the trade? You see these lows on the 15-second here. As we're approaching these lows, the only line of defense that I have right now is this green candle. This will be a continuation OB. If we're bearish, if we're truly bearish, this should help us run past the yellow line more than we did. This is called a mohawk. A mohawk is when we slightly push past liquidity like this. This is called a mohawk. We mohawked it, but we didn't destroy it, right? I want to see us aggressively move past it like we talked about earlier in the Zoom. But so this is my last line of defense right here. So off rip, once this gets invalidated, once we come above it, I trimmed majority of my position. I held a couple runners to see if this fair value gap would work. I'm looking at the lower half of this fair value gap. Once we came up here, I just took the rest off because I'm like, we out of here. I know what they about to do. Because that's not bearish price delivery. And that's why I keep telling y'all, when you learn what true price delivery looks like, it helps you get out at the bottom. It helps you know just what to look for. You know when you're wrong really quickly. You know when you're right really quickly, because the market does the same thing over and over. And so Next thing you know, what happened? We start running out of nowhere, like, whoa, like a strong push. We took back the entire drop, the entire drop. Now, what was the reason I'm bringing this up? To show you how to avoid chop. So look, this is how I set up. Today about to be trash for real, for real, for real. What did I say? We really wanted to come to the bottom yellow line. That was the goal. Like, in my opinion, if we had any level of trend today, we would have ran the yellow line. If there was any level of trend, we would have ran the yellow line. Cool. Bad work. To me, that shows that the Bears did not truly get what they wanted. Thank you, 1242. I didn't repeat that. The contracts have changed. Yeah, I gotta update that. I'm glad you reminded me. So boom. The Bears did not get what they wanted, because with true bearish delivery, we should have ran that. With true bullish delivery, we need to aggressively move past that. If we're going to be bearish, my fault. If we're going to be bullish, now we need to truly run past this. I told my mentees here, I'm not playing upside because what I say in the chat, mentee, I was like, I'm not playing upside because bears didn't get what they want and bulls haven't been getting what they want. That's how I know to go cash. Look what ends up happening. What really happened? We ended up chopping, and then we start coming back into the range. Like, it was just not favorable. Nothing. This is conditions that destroy your account. So my point in this, and what you could take away from this demonstration, is you're looking at the delivery on both sides, not just the side you want to play. I'm looking at bearish delivery. It was looking good so far. Boom, stop short. It didn't get to the target. That's strange. You know what? It's cool. Maybe we bullish today. Maybe I'm on the wrong side of the market. We about to run. All right, so if we about to run, as we leave this range, we need to leave it aggressively, right? Boom, start chopping. When you see this, bro, that means that both bulls and bears is not getting what they want. You need to recognize that and honestly just stop. Like, don't even do it to yourself. And anybody who traded on Friday knows, like, Friday was just dirt. Like, this is literally what Friday ended up doing. And I think, the market already had closed right here, somewhere around here. This was it. Friday was terrible. So yeah, that ain't it, man. That ain't it. So that's how you could, like, kind of recognize chop and everything. And yeah, I guess this is where we are right now. And so I hope that y'all got something out of that so far. And that's pretty much takeaways I wanted to talk about regarding last week. So y'all learned some things in that. Hopefully I got some stuff out of that, because now I want to get into this week. Can I get ones in the chat if y'all got something out of any of those two demonstrations? Ones in the chat if you got something out of them demonstrations, man. I know I just said a lot. I just said a heck of a lot. Signatures, man. Signatures. Pay attention to delivery. I appreciate y'all, man. I appreciate y'all in the chat. A whole lot of ones in there. Smooth. So we on a good start. We got a good start. Now let's take it to this upcoming week, man. Throw last week in the trash. Last week was low-key trash. Throw it in the trash. And let's get into it. Spike said, I tried to take the extremes and still got faded on Friday. Yeah, even the extremes wasn't even working out, because it's like it didn't go in the opposite direction. So if you taking the extremes, I mean, like the highs, basically you're trying to ride it back to the low. We didn't even go to the lows. Like, we just chopped right in that spot, and it just, Friday wasn't it. Friday night. And yep, signatures. You know that post mine. So with that being said, man, let's get into next week, meaning tomorrow into Friday. So Monday, nothing to really talk about. I don't expect too much. Tuesday, retail sales is something to look at. It might cause a little energy in the market, but really the whole market largely is waiting on Wednesday. I'm gonna be real. Like, I don't have the crazy expectations Monday and Tuesday, because Wednesday is such a major FOMC day. FOMC is when Jerome Powell gets on the podium and he talks about what they're doing with interest rates. So y'all know that we've been in a market with elevated interest rates, right? And the economy has honestly been doing all right under it, but now they're starting to show some small signs of potentially, it's like, are we cooling inflation or are we entering into a recession? So people are kind of like, yo, if he keeps rates high for too long, it could cause a recession. So it's kind of like, yo, Jerome Powell, we need you to cut interest rates because the elevated rates is like putting a lot of pressure on the economy and it could cause a recession. So there's pressure on him to cut rates. And he pretty much said last time that September is when they're looking to cut finally. Now, what are they looking? How much are they going to cut is pretty much what it comes down to, because everybody agrees that they're going to cut rates, but by how much? This is the official tool. I pulled this up last week, if I remember correctly. I know I did with my mentees. Hopefully I did it with the free community as well. I've been showing people that this is the official tool to learn the current market expectations on whether or not how much Jerome Powell is going to cut rates. Is he going to raise rates? Basically, it's telling you all about what the interest rate decision will be regarding when it comes to expectations here. So you can see that it's 50-50. Literally, no one knows if he's going to do 25 basis point cut or a 50 basis point cut. It's literally 50-50. But I think everyone agrees collectively that he's not going to keep the rates the same. If you've been following the interest rate decisions, he's kept rates the same for a pretty long time now. In 2022, I believe he rose interest rates 6 times. It was a record. He rose interest rates crazy, and then ever since then he just left it right there, right at the top, like super elevated rates. We've been there. This is the first time he's gonna cut, and so this is such a major FOMC because the first time he's gonna cut. And I'll post this link in the chat. I think I see somebody say you wanted to know the site. So here I'll put this in the chat right now. If y'all want, y'all could keep that right there and keep your eye on this, because changes here you need to drop his low. Yeah, changes on here definitely affect the stock market. And I know there's some comments in the chat that I missed, but I'm just trying to, because it's on YouTube, I try not to read the chat too much. But yeah, man, this is the official tool. So I know I see something in the chat that says I don't think he's gonna cut. If he doesn't cut, that would shock the market. We would drop freaking 3 trillion points. Like, I'm gonna say that right now, because this is the market absolutely references this tool. Right now, the market expectation is that he's going to cut. It's a matter of by how much. And you see that it's literally 50-50. There is no category for rates remaining the same. So now it's very likely that he's going to cut. It's just how much is really what the decision is about. So keep that in mind. And we went over that already, right? And okay. So with that being said, let's get to the tickers and talk like technicals. What are the technicals telling us? So here on DXY, let's go to DXY, man. Okay, so, and DXY is going to move this week. I'll tell you right now. I told you guys literally last week, I said DXY is going to stay in this range. Did it stay in this range? Yes. How am I knowing it's going to stay in the range? Because look how, what was this, Friday? All right, the way I looked at DXY was, we really wanted to see it come into this fair value gap. That was a very likely destination on the upside, fell just short. And then on the downside, we didn't actually run those lows and we popped back up. What did I talk about? I'm looking at both delivery. When I notice bullish delivery and bearish delivery, both are not delivering where they're supposed to, I'm anticipating a range that will ensue. So as you see, we came back to the upside, didn't run these highs, came back to the downside, didn't run these lows, and we're still stuck in the middle. I anticipate us pretty much staying here until Wednesday. Wednesday on FOMC, you're gonna see it aggressively move in some direction. Like, I don't know if it's gonna, come here and reject. I anticipate downside, by the way, on DXY, but I don't know. It's like, how will it happen? Will we come here and reject, or will it just absolutely just drop off? But either way, I do think we're gonna go to the downside on DXY. I'm looking at this weekly bearish fair value gap that we're rejecting, where we're still rejecting it. I'll highlight it for you. Basically, this green area. That's what we're rejecting so far. So I want to see that deliver a lower low for us. It's just like I said, the DXY is very news dependent. Like it's not going to really move until we have a reason to. And so, I want to address this question real quick because it does affect the charts. Like it's like, so if Jerome Powell cuts, shouldn't the market be bullish? Depends how you look at it. So that it really varies. Sometimes when the Fed starts interest rate cuts, the market absolutely tanks. I talked about this on some watch lists some weeks back, and I showed you guys the statistics for it. It's not just off the top of my head. Like I made sure I pulled out statistics to show y'all some interest rate cut years, the market just goes to the downside aggressively, and some of them it rallies. So it really just depends. It's no real predictability behind it. And the logic there for the years that it goes down is if they're cutting rates for a reason. So it's kind of like the market is like, oh, y'all see something wrong with the economy. That's why you want to cut rates all of a sudden. Because you were holding rates the same, elevated rates for all these months. Why all of a sudden you want to cut it? Maybe something's wrong. Maybe the labor market is turning over. Maybe consumer, what's the word I'm looking for? I don't know. Maybe the consumer is becoming weaker. And so like you guys need to cut rates because you want to stimulate the economy. Stock market don't like the fact that we may be heading into a recession, so it may sell off behind that. All right, so that's why it's pretty hard to predict, because it's pretty much we're trying to gauge, like, are they cutting just to cut because they're too elevated and they think that they got inflation to just the perfect spot, or are they cutting because they see a recession in the near future? And that's what it comes behind. So I'm curious to see how the market reacts as well. And largely when it's uncertain like that, I just lean on technicals. I lean on technicals regardless. I'm gonna be real. Y'all know it's all about technicals. It's always in the chart first, but I don't really have confluence from the economy because it really could go either way regarding his cut. Understand? Yeah, the market gonna do what it want regardless. Real talk. So all right, so now I'm expecting downside ultimately. If we come above this fair value gap, then I would expect more upside. So for me, I'm bearish on DXY as long as price does not invalidate. Really, I want bodies to hold the lower half of this. So specifically, I want bodies to hold the lower half of it if we even retrace that high, if we even get there. All right, above it, I would look for much higher moves on DXY. It'll probably run these highs over here. And yeah, so that's that. Same thing with the 2-year. All right, y'all know I don't move the arrows. We've been talking about the 2-year using this weekly BISI to run higher. We actually ran the previous weekly highs, so it's going well so far. But FOMC, once again, is another thing that'll move this. As you know, this is literally the bond market. The bond market is directly related to the interest rates. So I really should say indirectly related, because if interest rates are going down, this chart will go higher. They move inversely. If interest rates are going up, this chart will go down. Understand? So, I mean, first and foremost, we already know that he's going to cut rates. So if the rates should be going down, then you expect this chart to go up. But we've been charting this thing going up since it was down here. So way before it ever hit fundamentals, way before it ever hit, economics, the chart was telling us that we were going to run into this SIBI. Once we got there, what did the chart tell us? We're going to use this BISI to run higher again. I drew it back when it was over here. I drew this arrow just like this back when it was over there. So it's like it's always in the chart first, and then we gonna see what happened there. All right, so that's that. Let's go to quickly do Forex. I know I got Forex people in here. Forex, we talked about price using this bullish OB to run higher potentially. What I would want to see is for more upside, for continued upside. Because we're using the OB so far. This is a nice reaction, came out of it making 4-hour bullish fair value gaps. Everything looked good. I would need price to hold I want price to hold the lower half of this BISI if it even gets that low. Like ideally, if it just keeps going higher, that's cool too. But if it does retrace, I would want it to come to the lower half of this BISI before moving higher. The lower half, not the upper half, the lower half. If we lose the lower half of this BISI, then I expect it to run these lows. So it's an if-then statement for me on Euro USD. It's like this is higher for me, and if not, then we run these lows. And that's what I would that's what I was saying in the short term on Euro USD, British pound. I had this charted already. I want price literally like where it's reacting, and my mentees know why. This is exactly where we want it to react if we want to see more upside on it. So far so good. I mean, obviously I had charted this yesterday. So, actually a pretty nice reaction at market open right on this exact spot. That's good. That's good. So I hope, I see continuation on this ticker for more upside. I'm looking, if you zoom out, you'll see that it's being based off of this weekly BISI. This is also an order block, by the way. This is also order block, technically, by definition. And so, I want to see more upside. I want to see us run these previous highs. And so, that's why I'm looking, because I'm expecting upside, I'm focused on bullish PD arrays. So the takeaway for that is the higher time frame is telling me to stay bullish. That's why I'm focused on bullish PD arrays such as this. But if we're going to remain bullish, I do want this fair value gap to hold. I don't want us to come back to this one. This is one that I wouldn't want to see us revisit, to be honest with you. I'm not saying it can't work, but on a probability level, because we trade probabilities, this one is higher probability than the one below it. So this is what I'm focused on, especially at the beginning of a move, especially at the beginning. All right, so New Zealand dollar, same thing, just looking to see if we could, I want bodies to hold the upper half of this. So far so good, and I want to see it take us higher. USD CAD, still looking at this weekly SIBI. I want bodies to hold the lower half of this SIBI. We were told to go short since this. We wanted price to run the, man, honestly, this thing started like this. So it really started with this bullish OB. I showed you guys in the chat something called time distortion. Time distortion is when you have a valid PD array, such as this green bullish order block, and price consolidates on it. This is time distortion. You don't have to trade this. This is consolidation. You don't have to trade this. We talked about price using this to run the yellow line. So for many weeks in a row, every time we came to CAD, I was like, hey, I mean, price is holding the order block. I think it's going to end up using it to run a yellow line, and we'll just see what happens. Now, obviously it did. All of a sudden, bullish order flow occurs. We react to this VISI. We start pushing out. We run it. Why did we say that we're expecting a sweep? We expected a sweep rather than a run on liquidity. Remember, a run looks like this. A sweep looks like what you just saw. Okay, so we're talking about a sweep. Why do we expect a sweep? We expected a sweep on USD CAD because of the nature of the rally. The rally had no fair value. The rally is really, it's a choppy rally. I know you see a lot of green candles, but if I came to the 4 hour, you'll kind of see what I mean. It's a very staggered, like stubborn run into the yellow line. And so once we run it, all of a sudden you see price turn around. We talked about shorting it back to the downside. So this was a really nice move on CAD if you listen. And then now we came to what? Bearish PD array, which is this bearish fair value gap. I want to see price reject pretty much right where it's rejecting at. This is the overall area I wanted to hold for more downside. All right, this would be perfect. Like, this would be a very nice setup to see what we're seeing here, and I want it to run into these lows. Okay, we're smack in the middle of this range. Let's notice that from the high, put it like this. Look at the yellow lines. Between these yellow lines, if I were to run my fibs between these yellow lines, notice where we're consolidating. We're consolidating right around the 50%. That's a typical place to see consolidation, especially when we're in between sentiments. And so, you know, you can wait for trend to reoccur, but as far as just predictions wise, I do believe that we would use that to go lower. If we don't use that to go lower, I actually wouldn't play upside. I would actually tell you to stay away, because that means, like I talked about, bullish and bearish delivery did not occur. Bullish people want to see expansion over these highs. That did not happen for bulls. When we come to the downside, bears would need to see this SIBI take us to these lows. So if it doesn't work and we end up coming back above, I just think that's a ticker I wouldn't want to trade. And I would just look for something else that's trending right now. You could already see we've been in a range for quite some time anyways. You feel me? So that's how, you know, you avoid getting chopped up. This is US dollar, Swiss franc. Okay, this one right here, we wanted to see the rejection here. Things went well, and then at one of these lows, this is the monthly lowest body. Not bad. The lowest body in the monthly was a target we had. We got there. Now, how do you know if we're going to continue? Well, ask yourself, are we still in bearish order flow? How do you know if we bearish order flow? We're in bearish order flow if we're still rejecting bearish PD arrays. And so we've been ranging here. We actually didn't tap into anything. There's a chance we could run these highs, tap into this SIBI, and then still drop lower. So I remain bearish on this ticker as long as we hold this fair value gap. As long as we hold this fair value gap, I remain bearish on this ticker. Put it like that. The lower half of this fair value gap is ideally what I would want to see it reject. I don't want it coming to the higher end. Obviously, if it just drops off from right here, your question is answered already. It's just going to keep going. And I am looking for price to run this sell side liquidity at 0.83, 0.32. So that's pretty much a target that I have on that. And then last but not least on Forex is USD JPY. This is, you know, going well so far. We wanted to see this rejection on this weekly SIBI. It worked out, and we're dropping off. I want to see a continuation under those lows for real. You know, this is a pretty pivotal moment, because if it drops off here, it definitely has a lot of energy towards more downside. The monthly, when I looked at the monthly here, the monthly tells me it runs to come to 127.494. Now, I know you're looking at this and you're like, yo, bro, that's a pretty big drop. Yeah, I'm kind of anticipating that. I'm gonna be real with y'all. I think that's gonna occur. I think we're gonna have a pretty big drop, which is part of my confluence on DXY remaining bearish. So yeah, that's that. Now crypto, you know, here goes this roller coaster ride on crypto. My sentiment is the same on crypto. Anything I've said in previous weeks, you can see that on previous watch lists. Like, there's nothing else I'm going to say. I will say though, these lows from August 5th, I think it gets very bad for crypto under August 5th. So I know Ethereum is really close to it, but Bitcoin is not. You see August 5th is down here. They keep teasing those lows. We don't engineer liquidity for no reason. I do think that under August 5th lows on both Bitcoin and Ethereum, it can get very bad. So, but until then, I'm just not interested, because it's been consolidating literally since March. It's been consolidating literally since March. But under August 5th, I think it can get pretty bad. So that's crypto. Now let's run back to futures. Let's run back to futures. Now, here goes NASDAQ. Here goes NASDAQ. All right, man. So last week, after not tapping into this SIBI up here, which was the target I really wanted. I wanted price to come to this weekly SIBI. I'll draw it for you if you don't see it. I wanted price to go there. It got so close. Didn't touch it. Came down really hard. And we caught the drop off. So that was good. It's not like we got caught off guard. We caught the drop off around here somewhere, and we wanted it to go lower. Cool. But we wanted more. We wanted more downside. We wanted more downside, especially when we saw that price closed under this big purple area. You see, price had closed under that. So once price closed under this big bullish fair value gap, that's some like potential confirmation for more downside. Now, price comes to where? The lowest body. We always talk about the lowest body being a conservative target. I know we hit the lowest body. I see it. But at the end of the day, I didn't think that's as low as we wanted to go. I thought we wanted more. But next thing you know, price pops up really hard, and it remained bullish. And we know we got bullish fair value gaps. Like, this is a really powerful move. And so what do you do besides ride the order flow that you're currently seeing? And so this is what it looks like. We talked about price retracing into this BISI, holding the upper half of this BISI to run higher. And it did that, but the move is really choppy. I know it's choppy. I don't like it. I actually don't really want to play upside based on the nature of the upside. I don't like riding upside that looks like this, honestly. but directionally, I do have it going to and through the yellow line. So I don't necessarily see a PD array that it'll be tapping into that I want to take buys on. Like there's nothing here that I like to take us to yellow. I just feel like it's gonna go to yellow. Like the destination should be yellow. You see these relatively equal highs. This was always too pretty for me. Even when we dropped off, I don't know if y'all remember, I don't know if you guys remember when this occurred, but it kept teasing these highs for so long, and then we just ended up dropping. I'm like, hey, we rode the downtrend. I can tell you that. Money was made on the downside and all, but here we are. We're coming back for this liquidity. The order flow is currently bullish, but just because you know where price should go doesn't mean that you need to take that trade. So me personally, I don't want to really play upside unless I start seeing some fair value gaps coming, and then I'll be like, all right, like actually, I'll show you an example. So I need you guys to use your memory real quick. Look at this visual. Look how price is moving like this, and then know that it could do this out of nowhere. It could do that. Keep that in mind. Keep that in mind. Now I'm gonna show you something right quick. Keep that in mind, people. Now this is the equivalent, basically. Look how it all comes right back to the earlier parts. Come on, to the earlier parts of class. Look how it comes to the earlier parts of class. You had these lows. Remember this? This is kind of like what it reminds me of. It's like stagger move, but then like at the tail end of the move, it gets aggressive at the very like last moment. So that's pretty much what I'm talking about. It staggers at first, not really something I like to trade when it looks like this, but when it actually gets to the liquidity, it like blasts through it. And so there's room to trade, that side of the move if it occurs. So that's pretty much what I'm pointing to for on this 4-hour chart, this daily chart, whatever. 4-hour chart for real. All right. But either way, above here. Now, that's in the super short term. I have a bold prediction. I have a very bold prediction. Okay. I think that we're not done with downside. It's risky. I'm saying this on record. It's risky to say this. I know we look real bullish. Things look good. Like, I don't think we're done with downside. I really could see FOMC being something to take us back to the downside. And why is that? I think that right now they're manipulating price action. We're smack in the middle of this weekly range. It's like, look at the fact that we invalidated this very strong BISI, and then we didn't even make a SIBI. So when I look at that, I'm like, whoa, hold on. Both bearish and bullish delivery is very, very not favorable right now in this area, which points to like chop largely and manipulation, really. So, but I don't think we engineered these lows nor last week's lows for no reason. I do feel that we're either gonna like sweep, touch this blue, and then drop off hard, or we're just gonna like run this yellow line first and then drop off. But either way, I'm looking for price to turn back around. I think I said this weeks ago that back when prices over here, I wanted NASDAQ to do this. If you guys remember, I wanted NASDAQ to touch the blue and then drop off. It fell short of the blue and then it dropped off. Cool. That still could happen though. We still could come to blue and then drop off. But either way, I'm not convinced on upside. I'm just not. Price would have to really prove it to me. Like, now I'm gonna trade what I see, and I advise you to trade what you see, but don't get caught off guard to see the market drop off. That's all I say. And 1242 said they agree, and the move might not even be next week. Facts. I was thinking that too. I'm like, it might not even be this week, but like, this area is so iffy for me. It feels just manipulated. I don't think that we left all these lows for no reason. I look at it from both perspectives. I know I'm talking about a bearish perspective. Let's look at it from a bullish perspective. And let me tell you why I say what I say. To me, if we were bullish, we would have bounced right here. We would have bounced right here and went higher. We didn't. Okay, cool. That's all right. If we were bullish, I would have wanted to see a sweep sweep these lows and then run higher, right? If we were truly bullish. Price did not sweep. Let's be very clear. Let's be very clear. Price fell short of running the red lows down here. All right, price fell short of that. Okay, so that's suspect. Like, hold up, price did not accomplish anything to the downside. It didn't use the OB, this red candle. It didn't sweep the lows, and then it's popping up for what? So like when I'm looking at it from a bullish perspective, I'm like, yo, I would hate this if I was riding calls or if I was in buys. I'm like, yo, this is not what it's supposed to look like. Then I would start thinking like, we must be bearish. We must be bearish. Oh, by the way, I forgot to say another thing that happened was, once again, we didn't use this bullish fair value gap to go higher. So when I see that, like, I'm like, yo, so literally nothing for the bulls is playing out how they would want it to. So I feel bad for swing traders, by the way. Nothing's playing out how they would want it to. Now, when I look at it from with a bearish perspective, I could say the same thing. Bears wanted it to run these lows and didn't happen. Bears wanted it to come to this SIBI and then drop off. We didn't even get to that POI. Bears wanted this to happen. Bears wanted after this big red candle. Come on, man. After this big red candle, we wanted to make a bearish fair value gap. We would have loved to make a bearish fair value gap right here, just like this. This would have been picture perfect if you were a bear. Next thing you know, what happened last week? We ate up that whole range. No opportunity for a bearish fair value gap. When I see that, I'm like, okay, price is being manipulated. Nobody's getting what they want. FOMC, the most important FOMC of the entire year, occurs on Wednesday. I see what they're doing. I get it. They engineering liquidity on both sides. That's cool. And so it's like dangerous conditions first and foremost. But if I had to lean to a direction, like which side are they going to break out to? I do believe it's going to break out to the downside. That's my prediction. All right. And yeah, I'm actually getting the gold soon. So let me actually continue. So yeah, largely I do expect upside in the short term, everybody, in the short term. But do I think it's gonna last? I don't think it's gonna last for that long. But I will keep you updated on a daily basis in the chat. All right. So if you're not in a free community and you're watching this on YouTube, click the link in the description so you can join the free community so you can get those type of updates. Now ES technically used this bullish fair value gap here. It's nonsense to me. When I see price come this low into a fair value gap in this context, to me, there's a smart money trap occurring. And so even if we have an initial upside move, I think it's gonna get shorted. So it's like, I think that I'm looking at the same thing on ES. Literally, like same logic on ES is my same logic on NAS. Understand? And you know, things have played out. This is all before news events. Before the news event, I told my mentees, it's in the chat, that hey, before the news drops, I think this is what's gonna happen. We're gonna come into this fair value gap and we're gonna use it to run higher. What happened? We came to that fair value gap, we ran higher, but look at the nature. Look at the nature of the rally. Always be suspect of rallies that look like this. It's not moving like that for no reason. So, you know, they got the same setup. You see these relative equal highs. I think that's next. After that, I mean, you might as well run all-time highs, but how long do I think it'll last? I just don't think it's gonna last too long. All right, so that's ES. YM is in chop. I got nothing to say about YM, bro. So stay away from this. I personally think you should stay away from this ticker. Yes, the fair value gap we targeted ended up running price to the upside, but still, like, and yeah, it's likely it's gonna run all-time highs again. Yes, it's likely to do that, but I'm just not a fan of what's occurring right there. I can say the same thing here for the Russell after he uses bearish OB on it. After he uses this bearish OB on a daily when it comes to Russell, what was I saying? It didn't run these lows, so like I'm like, okay, that ain't really it. A nice reaction, but it didn't run the lows. So now as it comes up and we're still in this range, it's like I'd rather not really trade this for the same reasons and just take the logic here. Take the logic on how to avoid chop. Because I know I'm talking about the daily time frame, but everything I'm saying applies to every single time frame. If you're noticing a lack of accomplishment in both sides of the market, you're probably dealing with a range. The Russell here, we called down here, we called the rally to the yellow line. Remember that? We sniped that, rallied to the yellow line. As soon as it hit the yellow line, what it did, consolidated, dropped off. We talked about the drop off. We wanted it to run these lows. It ran those lows, but we wanted it to continue and run those low. It did not continue. All right, maybe that's all it wanted. It's running higher. If we're bullish, it needs to go and take off and run these highs. It refused to run those highs. It come this once you see it react like this, yo, stay cash. Stay cash. The Bears and Bulls didn't get what they wanted. Stay cash. And so now you get my logic. Please apply that to the 1 minute time frame. Please apply that to the 5 minute time frame. Please apply that to the hourly time frame. That is how you avoid chop in your account. I'm giving y'all stuff that'll literally like change your entire trading trajectory. Everybody wants to learn the most profitable setups, but people are lacking defense. You're not learning how to play defense. I'm telling you guys effective strategies on how to play defense with your account. You need to watch both sides of the market. Y'all want me to teach y'all, you know, some type of PD array, and it's like, yo, you don't need to learn any more. You actually need to learn how to play defense. That alone would allow you to pass your funded challenge or whatever the heck. All right, so the Nikkei, something else we were watching, we got the rejection where we wanted it to. It's chopping. This thing is another thing that I think is going to move to the downside. This was a major part of the historic drop that happened right here. The Nikkei was directly related to that drop when it comes to the carry trade, without getting into detail about it. But as you know, the market everybody got really scared on August 5th, and then the market rallied ever since, but the nature was really choppy. We wanted to see a rejection right here at this RB. Price dropped, and now it's consolidating. I told you guys, even though a lot of the market is consolidating right here, I'm leaning towards things ending up going back to the downside. We will see, though. We will see. Here, Janae, you already know, right? It's the most important thing we got to learn is defense. Most important thing. All right, here on CL. CL got to a destination here on the weekly, right? We got to weekly RB, but the thing here is that if I want to see CL run lower, like if CL is truly ready to make its move out of this range, because we've been in a range on CL for quite some time on a higher time frame. If it's truly ready to make this move, you will see CL reject the lower half of this SIBI and run lower. All right, if it's truly ready to break this range. If it does not reject the lower half of that SIBI and run lower, it's gonna still be in chop. I'm gonna tell you, all right, it's gonna still be chop, and it's just low probability setups. On the 4 hour, we talked about this last watch list. We wanted to see a rejection on this SIBI. I actually told you guys the upper half of this SIBI, if y'all remember. I said I'm expecting price to come to the upper half of the SIBI and reject. You can see literally to the exact tick, we rejected that fair value gap to the exact tick, and then ran lower and ran the yellow line. Yellow line was liquidity from right here. All I took was a swing point, a previous swing point. That's what that was. Okay, so once we ran that, let's look at the signs. How do we know? I didn't trade this or nothing. I'm saying like we're taking gems from the price action. How do you know to get out? You would want to look at the fair value gap right here that formed on those lows, the respect of it. Once price disrespected it, you already know, get out your trade, get out your trade, get out your trade. We run to the upside. It's weird. Like I think the chart is bugging out right now. Actually, maybe it's not. Never mind. Because I was about to say it looks like we rejected the SIBI, but nah, never mind. Yeah, so you know, we want to see if we do move to the upside, you want to see it reject the lower half of this blue area to run lower. And so that's that. That's CL. Now let's get to gold. Let's get to gold, man. Gold, yo. I'm actually interested in gold this week. So y'all want to see time distortion again? I put this in the chat already, but I'm gonna talk about it verbally here. Time distortion. I showed you guys this on gold many weeks in a row, this bullish OB. Price has been consolidating this OB for like 3,000 years. This is the daily chart, and we finally broke free. That's nice. That's nice. Now let's examine. You got to go in like a doctor. You got let's look on the inside right now. So boom, let's go to the 4 hour and look at the nature of this. We finally break out. We break out this fair value gap. I love that. This is a nice fair value gap here. But then what happened after that? It's been really staggered. Wicky, ugly move to the upside. I wouldn't ride that uptrend personally. I will wait for price to clean that up, because price doesn't typically move like this when it has real intention on moving higher. It's like, it's almost like it's baiting people to get in. It's just, these be those FOMO runs, like, I'm gonna keep moving higher. They whispering you like, I'm still moving, and you're like, whatever, I'm in there. And you all of a sudden you be like, yo, this is you when they move it up. You're like, I'm in there, 3 bars, let's go. And then as soon as you get in, you go negative. Like, all right, bro. Then it goes the other direction. Y'all know how that goes. So that's basically what gold is doing. I wouldn't ride it to the upside. Now, what do I think might happen on gold? You see this, I'm on the hourly chart now. The hourly chart staggered. This is liquidity. This part of the move staggered. This is liquidity. Cool. Look, you see this hourly bullish fair value gap, right? I want you to notice that on the hourly chart, this fair value gap has already been what we call mitigating. Notice that on that reaction, we already tapped into it, and it caused a higher high to occur in the market. Therefore, when price is what we call spooling, meaning using the nearest PD arrays to move higher, when price is spooling, you don't necessarily want to use the PD array twice. Being that we were spooling on this time frame where we just pretty much just a straight line move up, like I said, if we do come back to this same green area, I'm not a fan of using it to go higher again. It could happen. I understand it could happen. I'm telling you what I would not expect. Probabilities on everything's about probabilities. So boom, let's say this does get invalidated. If we come under this green, I think that gold is gonna make a deep run to clean all of this up. We're gonna run past all of that and we're gonna go to the purple. Okay, so on the hourly, I will be watching this area to get revisited. If it gets revisited, I do think it's gonna end up trading through it. I don't think we're gonna use this fair value gap a second time. If we do, we do. I'm giving you a downside plan. I'm not interested in upside. Not when it look like this. I don't want to play upside when it look like this. So I'm literally coming up with a downside plan only. Under this, I target purple, which is the purple fair value gap. Now, when we come back to purple, do we go long from there? I personally wouldn't want to see it come back to purple if I was bullish. And so to me, when I think about that, I'm like, well, if I was bullish, I wouldn't want to see this. And so there's a chance that gold could be doing an AMD setup. What is an AMD setup? It could be doing something where we accumulate, we manipulate, and then we distribute. That's interesting, yo. Hold up. That's really interesting. Hold up. I might got something for y'all. That is so interesting. Hold on. Let's really talk about something, man. Really talk about something. Hold on. What does this remind you of? Did we talk about this on CAD? Time distortion on the order block, right? Time distortion, just like gold did, finally moved out of it. We moved out of it really choppy though, right? Really, just looks like gold. Really choppy move. It's going up, but it's like, yo, that's weird. I don't like how it's moving. When it comes back in, yeah, it runs the same lows that tapped into the order block, runs all of that and comes down pretty hard. So that this is literally what gold reminds me of right now. Same vibe, same setup, same vibe. And it's standing. So that's kind of like what I'm seeing that could potentially happen on gold. We could make a hard move back down and run, honestly, all of these lows, but it really depends. You know, it really depends. You can see that on FOMC, maybe not. You know what I mean? But it's something to keep your eye on. Obviously, if we come to I'll say this, if we come to this purple area and you see nice reactions at the upper 50%, you know, maybe you could take that to the upside, but I'm not really too high on it. If it comes here and it starts like staggering, you know, it's probably gonna get shorted back down like that. Okay, but either way, under the green, I'll target purple. Once we get to purple, I think it's gonna end up, you might get a reaction, but I don't think it's gonna generate new highs. I hope you hear me clearly. You might get a reaction, but I don't think it'll generate new highs. SPY. I think that SPY will use this purple 4-hour BSI and VI to run the yellow line, which is the all-time highs. I told you guys, SPY, QQQ, I don't think they're gonna move much higher before dropping off. So QQQ, same vibe. Like, why am I still on replay? Hold up. Okay, so QQQ, this gap here is something I can see QQQ making a lower high on. That gap is something I'm watching on QQQ on the daily, or, well, actually, we did tap into the SIBI already. We could reject this SIBI twice though. Like, this is possible. We could still reject it again, but I don't know. I'm basically, all I'm saying is I'm looking for a lower high on QQQ and a higher high on the SPY. So that would be an SMT divergence. I said this actually a couple weeks ago that I was looking for SMT divergence on QQQ and SPY, which means, once again, SPY makes the higher high, Q makes the lower high. It's a bold prediction. It's rooted largely in speculation, paying attention to the delivery, but it's no confirmation yet. It's nothing to take a trade on yet. I'm saying this stuff to protect you and me, because I don't want to, like, I'll tell you guys when I'm really like, oh, I'm saying this because I'm certain about this. I got confirmation. Look at, no, it hasn't happened yet. There's so much that has to occur. I'm telling you what I could see happening. So I want you to know the difference. Okay, so I could see us making a lower high and a lower low. There's so much that needs to occur. We will find out. And you guys will be in the loop. You feel me? So yeah, I mean, those are all the tickets I wanted to go through here across the market. So we talked about last week, we talked about this week. Yeah, I know overall when it comes to NASDAQ, which is what I trade 99% of the time, I am very skeptical on continued upside in the intermediate term. I think in the short term, like you're probably seeing right now in the after hours, in the Asia session, in the short term, I'm looking for us to run this yellow line. I just don't see us going that much higher. We could even come to blue. That's possible too. But when I say that much higher, I'm really talking like all-time highs vibe. I just don't really feel like NASDAQ is going to go all-time high. I don't think so. But we'll find out. We'll find out, man. I will keep y'all updated. So that being said, if you're watching this on YouTube, please click the link in the description for the free community, so you get all the updates on a daily basis and a lot more. It's a lot of fun and it's just a great environment for everybody to learn from. Everybody, there's no egos in there, and it's just everybody just want to make each other better. And also, I'm doing a masterclass on breaker blocks. I promise y'all right now, I'm gonna teach you something about breaker blocks you never heard. If you think I'm just gonna teach you the standard stuff you could just regularly just go and watch on YouTube, you're sadly mistaken. I promise you that. There's gonna be stuff I tell you in that class that you've never heard before. I'm gonna tell you that right now. And I guarantee you that. And if that's not the case, DM me. I send you your bread back. Real talk. That's how I feel about it. So that being said, subscribe to the channel, like the video, and that's all she wrote.